So now let's put step 1 and 2 together. Right? Let's try to predict the stock market by operations. Right? We're going to look at Amazon, the roller coaster, of course, and some other examples. Now, perhaps it's the time to review the critical and subtle connections, which we're going to talk about, which we talked about all the time, right? So here is the connection, right? Better operations or supply chain management will lead to higher revenue and lower cost. And that's going to translate right into improved financials, such as better net income or operating cash flow and so on, right? And that's the step 2. We just proved it, right? And the better financials will translate into larger market capitalization and higher stock prices. That's what we proved in step 1. We showed in step 1. And so this is what we call the critical or crucial, but indirect or subtle connections. And we're going to illustrate these connections by 3 examples. Amazon from the retail industry, Boeing from aerospace industry, and Tesla from the auto industry. So let's first look at Amazon's financials and stock market performance. Right, so in the last 7 years, right, we plot out net income, right, the total cash flow from operating activities. These are the important financial indicators, right? And the same map with the ending stock price and market capitalization. Right, ending stock price is the close price and the day of the annual report. That's why I call it ending stock price. So, and you can see these numbers move closely together, right? When financials went down, stock price went down. When financials went up, the stock market performance went up. Now, maybe this graph can better show you the correlations, right? So the circle is the net income of Amazon. The diamonds, right, are the market capitalization over time from 2016 to 2023. Now, looking at this graph, what can you say? Well, what I can say is, at least for Amazon, predicting stock market is equivalent to predicting the financials, right? Now I can bring up the cash flow from operating activities, which show you the same correlation. Okay, keeping this in mind, let's move on to ask 2 questions, right? What happened in year 2000 at end of the year 2022? Right, the net income dropped significantly, right? And can we predict the rebound of both the financials and stock market performance? Okay, so let's try to answer these questions, because if we can answer these questions, right, we can predict the stock market, at least for Amazon. So let's look at Amazon's profitability and financial health, right? Let's look back to 2022 and let's find out what's going on. Okay, now in year 2022, let's first look at the profitability, right, from the total revenue and net income's perspective. So we can see here, first look at the revenue, right? The revenue growth slows down. Look at this, starting from 2019, 2020, 2021, and so on, the revenue growth accelerated, right? Because of the pandemic, right? Everybody's shopping online now. But from year 2022 to 2021 to 2022, 2022, and the pandemic's gone, right? And so the revenue slows down. Now, the net income plummeted. So the reason behind that is the cost didn't slow down. Right, revenue slowed down, but still they spent a lot of money, and so the net income plummeted. Okay, now before looking into the cost, let's first look at the financial health. Right, the current ratio is still robust. Although slightly decreased, but still close to 1, so they should have no problem paying out the short-term liabilities. Look at liability asset ratio and the overall liability of the company. It's actually improved, right? Liability went down. So Amazon is not going to, it's very healthy, right? Both short-term, long-term, this company is not going bankrupt, right? In the near future, right? Now let's look at operating indicators to see what exactly went wrong. Okay, so only understand the cause, then we will see if this company can rebound. Okay, so the operations shows the details, the indicators. First look at the cost of goods sold as a percentage of the total revenue. It remains quite steady, right? 78%, 87%, 86%, so on. It remains the same. So that means sourcing is not an issue. Okay, and let's look at inventory days. That's internal operations. Inventory days actually went up slightly from about 26 days to 28 days, 2 days more. Is inventory the biggest problem? Well, it may not, because it doesn't increase by much. If it's a problem, it's a minor problem, right? And let's look at labor productivity. That's the revenue divided by the workforce size, right? It turns out they have a sharp decline during the pandemic. It used to be 37, which is $370,000 per person, per employee. It went down to $290,000 per employee, more than 20% decrease. Well, they hire a lot of people during the pandemic. And let's look at finally SG&A expenses over total revenue, right? We can see there's a like 4% increase in a 2-year period, 4% increase. Now their net margin is about 4 or 5%, right? So you can see labor cost, workforce management as an issue. Inventory may be a minor issue, right? Sourcing is not an issue, and operations is the biggest issue. SG&A. So just to confirm our intuition, our insights, right? We compare the breakdown of the revenue of Amazon between 2021 and 2022. Remember, 2021 they made a lot of money, right? The stock price is really high. And 2022 they lost some money, and the stock price went down. So if you compare the revenue breakdown side by side, we can see first, right, the SG&A expenses, right, increased about 2%, right? But in addition to this, the other costs, which I will explain in the next slide, increased more, right? It was negative 2.8% in year 2021. But year 2022, it becomes positive 3.7%, like 6% difference. And look at their net margin, year 2021 is only 7%. Okay. So as investors' business data says, right, sales slowed and cost ballooned. The cost ballooned due to overexpansion, right, to capture the expected sales, which didn't materialize. Okay, so now let's look at Amazon's turnaround strategy. It turns out Amazon reacted very, very quickly and addressed all its strategy, addressed the very issue of the downturn. Okay, and so this is what Amazon did: massive layoff and reorganization starting year 2023. Now, Amazon actually is the company that fired most of the employees in this year, and drastic cost-cutting measures from ending experimental projects to pausing grocery store growth, that's all the other cost, right? To cutting jobs, right? I say all the times. And when you see such signals, it's clearly a rebound case because they are addressing the very issue that leads them down, right? So this is a strong buy. Why? Because of the close relationship, right, between stock price and earnings per share for Amazon. right? We call this the price regression model. So if you do a regression model on the price with respect to its financials, you can find a strong correlation, right? That means if their financials come back, their price very likely will come back, right? That's what actually happened. Our second example is Boeing, right? Let's plot Boeing's stock market capitalization and net income together, right? Over time, right? Let's put these two trend lines together. What can you see? Growth correlation, right? So for Boeing, if you want to predict its stock price or stock market performance, just look at its financials, right? And here we have two questions. What was going on here, right? They have a sharp decline in terms of financials in 2 consecutive years. And of course, right, if you're investing in Boeing, you're asking the question, what's the outlook of Boeing in the future? Okay, so we have to look at financials, right? So, okay, using the same methodology, right? First look at their total revenue, Boeing's total revenue. It turns out Boeing was on an uprising trend, right? Before 2018. See, the revenue slightly increased together with the net income and looks pretty rosy in those years. But suddenly, it has a 2-year consecutive decline. What was going on is the 737 MAX crashes, right? 2 crashes and killed about 300 people. And that's a huge blow to Boeing's revenue. Revenue declined, if you look at this, in 2 years, right, by about 40%. Revenue declined about 40%. And that stays there because of course, year 2020, that's the pandemic. And airlines were hit hard, and they, of course, have no interest to buy more airplanes. So revenue stays now pretty much the same as, it's kind of similar to Amazon, right? The sales, in this case, of course, it's more dramatic. The sales not only slows down, the sales growth, but also declined and stays, right? It stays low for a long time. Now let's look at net income, right? Unlike Amazon, Boeing was not able to adjust costs quickly. So the net income dropped significantly during these years, right? Together with the revenue and remains low, right? For nearly 5 years. And only in recent years, you see a slight coming back. Right. So if you look at gross margin and net margins, right, it went down pretty quickly or sharply and stays there for a long time, right? Only until year 2023, we see some signs of recovery. And that's almost 5 years after 2018, the crashes. Right. So the conclusion is the sales went down, but cost remains high. Right. And that's why Boeing was not performing very well, right? Both in financials and stock market. Okay, operations will show you the more details, right? You look at different aspects and sourcing, operations, inventory, workforce, and so on, right? You can see that cost of goods sold in terms of as a percentage of revenue, right? It went up significantly, right, when the revenue went down. So which means Boeing was not able to adjust sourcing or supply management quickly, right? Or internal productions still continued despite a sharp decrease, right, on revenue, right? Now, even now, they were still about 90% of the cost of goods sold is 90% of the revenue. Of course, they made some improvements, but not as effective as before. They were like 80% before the crashes, right? Now, labor productivity, 40% down. So that's workforce management, right? They still keep a roughly the same workforce despite a much lower revenue. Only until recently, they lay off quite sizable amount of people. And inventories, 100% up. They built a lot of inventory piled up, right? Sales slowed, factory still working, well, inventory went up significantly, and which also contributes, right, to the sales general administrative cost, almost 100% up. Okay. Now, what's the future outlook of Boeing? Are we looking at a stock rebound? Well, look at the financials, right? So there's strong correlation between Boeing's stock price and earnings per share, right? And this is how the regression look like, right? Now, the answer is depends, right? Depends on Boeing's financial performance, right? If Boeing could cut costs very quickly, right? Improve operations and supply chain, so on, which improve the financials, right? Boeing's stock will come back. Otherwise, it will not. Okay. Now, one last example, right? That's the Tesla. A lot of people interested in Tesla because of its wild swings, right, of stock prices over time. So what is going on here, right? So let's look at Tesla's market cap versus net income over time, right? Although it may look like there is some correlations, but if you look carefully, the correlation is kind of weak because we have a sharp contradiction, right, over time. So from the year 2021 to 2022, Tesla's net income increased dramatically, right? And it's doubled, but its stock price, right, reduced. The market cap reduced by almost 60%. So what was going on here? If you want to find out what was going on with Tesla, we have to compare Tesla with its peers, right, in the automobile industry, right, such as Ford Motor Company and GM. So let's first look at Ford Motor and the General Motors, right, without looking at Tesla, because Tesla is the outlier or exception. So if you can look at Ford Motor Company and GM, you'll find out their stock prices and their earnings per share actually is moved closely together, right? There's high correlation in their movements, but not Tesla. Okay, if you add in Tesla, you'll find out actually it is not. The correlation is very weak. Okay, that's first observation. And second observation is, if you compare Tesla's net income with Ford Motor and General Motors, you'll find out the net incomes are comparable, of the same magnitude. Okay, sometimes actually Ford Motor or GM is even better than Tesla. However, if you look at the market cap, Tesla is 10 to 15%, 15 times, not per percent, 15 times the market cap of Ford Motor Company and GM. Right? So if we, let me just come back. So this is what happened. There was a lot of hedging, right, going on here with Tesla, right? Speculations, right, skyrocketed, right, for Tesla in year 2000, then 2021, right? It becomes, and until 2022, people suddenly realize that Tesla is just another automobile company and way overvalued, right, in comparison with its peers. So the stock price went back down, of course, safely, right? Lost the market cap lost about 60% of the value, right? This is human madness, right? It's purely based on speculations and guesswork. Now into 2023, the whole crazy cycle starts again. Okay, now there's no way to predict Tesla's market cap or stock prices because of the human madness, right? The speculations, the hedginess, so on, right? As Sir Isaac Newton said, right? I can calculate the motions of heavenly bodies, but not the madness of people. right? So Tesla stock price is a typical case for hedging and speculations. So let me recap, and we'll open up for questions. Predicting stock market, right, is equivalent to predicting financials in many cases, but not all. But not all. And second, right, operations and supply chains is critical, right, in establishing a competitive advantage in financials in most industries, right? So supply chain and operations have a direct impact on the bottom line on financials in most industries, not all industry, right? At least not for financials, the financial industries. And finally, if we combine these two steps together, these 2 points together, right, improve operations and supply chain, we improve stock market performance in a predictable way. Now, in many cases, but not all. So you have to check the data. Right? But if the data shows a strong correlation or causal relationship, then it's very likely, right? There's a connection between supply chain operations and stock market performance. Okay, before I conclude, I want to tell you all these materials and I presented today are included in the course module called Operations Driving Stock Market, right? It's built on the 2 steps, right? Financials versus stock market and operations versus financials, right? The learning objective of this module, right, is to assess and estimate the impact of operations and supply chain on financials and stock market, right? And also provides an overview or review of different topics, right, in our domain and their contributions. So the ultimate objective is to provide students a big picture, right, at the beginning of the course or at the end of the course, and to tell them why they need to study operations and supply chain topics.